From the floor of the CME Group, this is Danny Riley with today's Cash Close. You guys know I get a little crazy when I do these videos. And the name of this video is going to be 9 Days of Buy Imbalances. Excuse me. The high of the day in the S&P came in at 20.85 even recently. The low came in at 20.7230 early. And last, we're 20.8470. We're up, can you believe this? 19 handles. For those people that don't know what a handle is, it's a point. Now, I got to ask you something. Can you say thin to win? I can. Total volume, 1.35 million minis trade, 2,000 big S&Ps trade in the pit. MOC, there was a little MIM shenanigans. The MIM was showing 80 million to sell, and the actual MOC came out by 80 million. Wow, had that thing reversed. Tomorrow we've got a light eco schedule. We've got the import-export prices number. We have the consumer sentiment number. We have the Dallas Fed President Richard Fisher speaking on his 10 years at the Fed. And now let's talk about a couple little things here. I've been talking about this, and the mutual funds have been buying all month. And I started talking about a little back and fill price action last week, but I really kind of put my pedal to the metal going in on Monday and Tuesday when I started talking about the potential for the S&P to start to trade above the 2770 level up to the 2085 level, where all these stops were kind of congested. And today, the high of the day is 2085. Now, as we go into next week, we've got a shortened holiday week. Monday, the CME is closed for President's Day weekend. So then you fall into a shortened expiration week, and Tuesday, turnaround Tuesday, stats is actually very good. The Tuesday of the February expiration has been up 21, down 10 of the last 31 occasions. So you know what? As thin as things are, I don't know. I don't know that this is just going to stop, but I will say one thing, and I do want to point out something. You know, now that everybody has gone from short into the decline to long into the rally, this creates something that I call the bus too full. And at some point in here, my friends, it is going to stop going up, and we are going to get a pullback. But right now, it seems like the momentum and all the buying that's coming in from the big investment firms and the mutual funds is supporting this. And again, what they're doing is they're using the shorts to help fuel the market higher. This all goes back to that same strategy about the zero borrowing rates and the whole thing with the Fed's quantitative easing programs. And then it all falls back into that thing that we talk about with the stock buybacks with the zero borrowing costs. As long as that's going like that, there's going to be money that's going to be put to work in these buybacks, and that means there's going to be stock buys all over the place. And you know what? Who's to say that the S&P can't actually go considerably higher here? You know what? I just don't think it's going to go straight up. I think it's going to be a choppy road ahead. Now look, I'm going to leave it like that. It was a long day of grinding higher, and I again want to point out that the volumes have dropped considerably. They've gone from 1.8 million to 2 million minis a day, down to 1.1 to 1.3 million a day. You know, we always see better volume on the downside. We'll leave it like that, and we'll see you guys tomorrow on the opening print.